Welcome to the Future of Finance interview. I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Peter Hughes, CEO of Apex Group, which he founded in 2003 with the vision of providing a global fund servicing business for asset managers, asset allocators, family offices, issuers, and financial institutions. Under his leadership, Apex has also pioneered digital asset services in the funds industry, enabling Apex Group customers to issue, distribute, and service tokenized funds and asset-backed stablecoins. Peter, thanks very much for being with us.
It's great to see you, Dominic. Thank you for having me.
Can I begin at an obvious place, which is what appetite have the asset management clients of Apex shown so far for tokenizing their funds?
I think tokenization has been around for quite a while, but people are really puzzling about why do you tokenize, and a lot of people tokenize things just to tokenize. But I think the last sort of 9 months has really seen an inflection point where our, I suppose, clients are really beginning to focus on tokenization because there is a purpose, and the purpose initially is because tokens can be collateral, and then that adds a lot of value, but also it can add a lot of value in terms of liquidity, and we're seeing a lot of people looking to tokenize money market funds for that collateralization point of view. And when that collateralization or solution comes into play, they're also looking for the funds to operate 24/7/365, which is a really dramatic shift in the industry. And so that's really enabling, I think, funds to trade perpetually. And if that happens for tokenized money market funds, it can happen for many other types of fund instrument. And that's really where we're really focusing our attention. And that's getting a lot of institutional focus from largest asset managers are looking to really tokenize funds and reformat their funds so they can access different types of investors than what they might have done traditionally, which just been the institutional investor network. Now, when you reformat funds, many more types of investors can come into them, like whether it's wealth, retirement, retail, and even crypto natives. But the regulators need to keep pace with that as well, and that's different in different places. And obviously, the new administration in the US has been a big advocate of this, and you've seen the Genius Act and the Clarity Act. These are all really propelling the momentum around this part of the industry.
You've mentioned tokenized money market funds and liquidity, and I'll come back to you on that. It's interesting to talk about that a bit more. But first, could you just answer a technical question? Are the funds which your clients are showing interest in tokenizing, are these mainly digital twins of established funds, or are they looking to issue funds natively onto blockchains? And irrespective of what they're doing, does that distinction matter very much?
I think some are actually just going straight with digitally native and tokenized funds, and that's all it is. But also, I think there'll be the hybrid version, as you mentioned, which is where people are going to access their current sort of investor base with a conventional share class, and then their new investor base with a tokenized share class. And so, we can operate both within one vehicle. And I think certainly as the industry is evolving and stepping more into the digitized on-chain world, there will be that phasing. So we're seeing a bit of both is really the answer.
No, it's an important point that if you're reaching new types of investors, if you're going fully native. You also mentioned 24/7/365 trading. Now, are we in the early stages of fund liquidity moving away from the traditional principal model towards a genuine secondary market?
No, I think we are. I mean, I think it's both 24/7/365 in principal and secondary. But I think, I suppose frictionless finance is really what this is all coming down to. And my view is in a few years' time, the longest, I suppose, valuation period will be daily, and a lot of it will be intraday or real time, as atomic settlement ends up on both ends, on the asset side and also the investor side. Yes, I'm talking about what will happen in maybe 5 to 10 years' time, but I think certainly the direction of travel is there when you actually can operate a fund 24/7/365, and it can trade like a digital asset or Bitcoin and be accessible at all times. I think that's just a natural evolution of an industry when once the technology exists.
But would you, as a fund accountant, you would expect net asset value calculations to persist, whatever happens in the long term, to how funds are traded? They're always going to need that NAV calculation, are they?
Absolutely. And certainly the NAV calculation can become much quicker. So we see currently the market norm for private markets valuations is a quarterly valuation with maybe a 40 business day turnaround and a nice PDF sent to the investors. I think that should be certainly daily or weekly with a statement which has got an interactive view from an AI overlay. So the industry is really shaping up for a big change in terms of actually what the underlying investors can get in terms of the timeliness and the frequency of valuation, liquidity, but also the transparency. All the tools are there now, making that available. And it's just a question of timing of adoption.
Mm. And do the liquidity advantages extend to the asset managers themselves? If you get a genuine secondary market growing, they presumably have to retain less liquidity in the fund to redeem holdings when people want to redeem their position in a fund. Do asset managers see that advantage and are excited about it?
Probably not yet. I think certainly I agree with you. It is an advantage, but mostly they're focused on the access to new types of investors. And that's more around the narratives you hear where people are trying to take private markets assets and distribute in the wealth channel. You see success of models like the iCapital model, which is obviously fractionalizing investing into some of these high quality asset managers. And it's been interesting to see how that does evolve. But I do think it will evolve in terms of actually people thinking about their retirement portfolios or their wealth portfolios, and trying to include a much broader cross section of quality investments in there rather than the traditional models, which I feel ethically will lead to better returns with lower volatility if you can put private markets assets into these portfolios with liquidity, whether it's primary liquidity or secondary liquidity. And I think that's going to be really valuable for people to create incremental wealth to retire with.
Right. So the asset gathering incentive is the one which is really resonating with asset managers at the moment, new types of investors, new asset classes, and so on. You mentioned at the outset tokenized money market funds, which have proved very popular with what you might call on-chain market participants, I guess cryptocurrency traders. Do you see evidence yet that their popularity is moving beyond that initial audience to encompass other types of trading house or investor?
I just see a lot of that. In our pipeline, we've got a lot of leading institutions looking to do tokenized money market funds because we've got the internal tech capabilities to deliver them and operate them 24/7, 365. And really that's the ask, because they feel that the evolution of having a money market fund with a cutoff, and having to be mindful of those cutoffs and things like that, it is clunky. And yet you can actually evolve that into a tokenized version, which has the underlying assets, but probably will actually perform better if you have the atomic settlement on the asset side and create more yield. But I think certainly that's a stepping stone. And actually, when stablecoins really gather more momentum, the tokenized money market funds will sit as a collateral behind the stablecoins once they're operating 24/7, 365. And so you think about the base capital being really fixed income, etc., that sits behind money market funds, and then that becomes tokenized and atomic settlement on the asset side, and then that acts as collateral behind the stable coins. So it all ties together, and ultimately I feel strongly that the actual end product is a yield bearing stable coin, which yields perfectly and is also a payment instrument at the same time. And I think there's a huge value in that to sit on corporate balance sheets once you've got clean AML flowing through these stable coins, and that validation exists. And I think that obviously isn't there regulatory wise at the moment, because you've got MiCA in Europe and you've got the Genius Act in the US, but I think it will come at some point. And then actually that does really complete the transformation.
You're describing a kind of symbiosis between stablecoins and tokenized money market funds, with, yes, tokenized money market funds making up some of the reserve of stablecoins. Now, you as a group have invested quite a lot in creating the stablecoin capability. Your thinking here is partly that there is this dynamic between money market funds and stablecoins, which have great similarities, I guess, as investments. But also, you mentioned atomic settlement. So stablecoins you see as performing a role not just in collateralization, but actually in speeding up settlement as well. Are there other uses which you see for stablecoins in the Apex Group ecosystem?
Well, there are things that already exist like tokenized deposits, and there are ways you can actually move money on chain. Some banks are very successful at that already. The Revoluts of the world, for example. So this is just another step forward where actually the stablecoin is perfectly yielding, but also is a payment instrument. And I think that really adds huge value to the ecosystem. It also adds value not just from the point of actually you yield better in the instrument. You send a payment, it arrives 2 seconds later. That's very efficient, and at a fraction of the cost, like pennies or fractions of cents to send, rather than a wire fee of $40 or $50, which is more common now. So the cost comes down massively as well. I think also the actual hedging or you're moving money into different countries and things like that. We see a lot of corporates are actually creating their own stable coins to save themselves a lot of money and FX exposure and FX exchanges, by using stable coins as well. So it all leads to a more efficient financial ecosystem.
You've used the word ecosystem a number of times in this conversation, and in a sense, you put a label on that, you put a brand on that in the shape of Apex Digital 3.0. That is an ecosystem which embraces fund issuers, fund investors, fund distributors. How do you get that ecosystem to become a network? How do you generate network effects so it becomes a self-fulfilling expansion machine in which you get more issuers, more investors, more distributors going? Do you have a clear vision of how you generate network effects in the tokenized fund industry?
I do, and part of that is making sure that you step into each regulatory environment and meet those requirements. So, some of the benefits we have being in 52 countries is that we're regulated in 35 different jurisdictions, and to be approved to do on-chain transfer agency is that distribution angle on-chain. It has to be, in my view, public chain. A lot of people build stuff on private chain, which doesn't have that network effect, or it's harder to make that happen. It needs to be chain agnostic, so it can be interconnected to be able to create that global scale. And the reason why I bought a business like Tokening was because they were operating an open architecture protocol on Ethereum called ERC 3643, which is the institutional way to operate public chain. And that was very important to me because you exactly as you say need to have that network effect. You need to be able to distribute not into silos or small pockets, but distribute globally, and distribute and connect into multiple forms and formats of new distribution. And that's really what we're trying to deliver for our clients. We're trying to do their hard work for them by creating their future rails of distribution into new channels that they don't currently access.
I guess as a fund service, if that's what you've always done, try to make it easier for asset managers to access new distribution channels. But now you've got this Apex Digital 3.0 ecosystem up and running. You've mentioned you're providing both transfer agency and fund accounting. If we'd had this conversation 10 years ago, people would certainly have been surprised that transfer agency survives a blockchain environment, but it's increasingly obvious that it has and has an important role to play, particularly in those hybrid funds. But what other services, if I become a customer of Apex digital 3.0. I can buy transfer agency, I can buy fund accounting, I can buy distribution. What else can I get? What other services can I get from Apex?
Well, I think the key unlock and differentiator from what was a service provider, or a long time ago, just a fund administrator, is to help our clients scale their growth. And that's unexpected when I talk to clients about being enabling their future asset raising as a provider. So we're really looking to evolve from being a vendor or a service provider to being a partner of growth for our clients. And we've already announced a few initiatives like that, where we're taking our clients and we're bringing them onto LSEG's distribution platform, their new network. And that's a really great initiative for us to combine with LSEG and their 400,000 LPs from Refinitiv that can actually come and look at and buy the funds that we put through into LSEG through our network. So that's just a start of it. So it's already happening. But there are many more examples like that, which we're trying to bring forward and add value. And I think certainly some of these services for fund administration, say, have become a bit commoditized. So you need to think about how can you add more value to your clients and make more of a difference to them. And for me, the only way to do that is to make them scale and make their revenue grow. And then it's a much better relationship, because otherwise it's just all about cost and saving, and is your reporting quicker and is it more accurate? And it could be all of those sorts of things. But the real differentiator is enabling your clients to grow through the efforts you have made and the investments you have made in the technology that you have as a service provider with them.
Is that the best way for us to think about the partnership you've formed with LSEG's digital market infrastructure? It's it's a new distribution channel. Those 400,000 LPs you mentioned get to look at the funds being issued by your asset management clients. It's really a distribution play. Is that the way to think about it?
Absolutely, and for them, it's bringing high quality funds into a network that wouldn't have generally accessed that network. On top of that, LSEG has 2,000 salespeople looking to try and make sure the volume flows through into their markets. So you actually not just get the access to the investors, but you get actually an active sales group trying to make sure that the platform's successful. So it's a combination of those elements. And I want to be in a position where I'm raising billions of dollars of fresh capital for my client base. And that's really one step in that direction. But I want to follow up with many other different steps like that.
One of the ways we could, or I could think about your strategy is that you're building a bridge or a segue between TradFi and DeFi, making it easier for your customers to make the transition. Hybrid funds being an obvious example of that. You can appeal to different audiences, investor audiences, by issuing your fund in more than one form. Am I right to characterize what you're doing as increasing interaction between TradFi and DeFi? And secondly, do you think that is the best and possibly the only way that the tokenized funds industry is going to grow?
Absolutely, we're passionate about being that bridge and applying that globally. Most people think about trying to do that and they're just doing it in one market. We want to do it across every market we're operating in at the scale we're at. So to be that bridge, you have to have the technology, you have to have the regulatory licenses, which we have, and you have to have the global scale to operate 24/7, 365, which with 13,000 people spread across 18 time zones, we have as well. So that's clearly table stakes in my mind, is to be able to deliver that. But I see a convergence between TradFi and DeFi. I see a convergence between traditional finance or traditional investment products and digital asset products. And really what I think could happen is that actually once things get reformatted into ways in which they can be ingested into wallet form and sit in wallets, which is where I think this all ends up. you'll see some of these DeFi exchanges being able to ingest and trade or bring to their client base tokenized funds from traditional asset managers. And then they'll sit in wallets of traditionally crypto investors. So I see that all coming together and converging in a really interesting way. And yes, it's very nascent, absolutely. But if you try and plan where the world will be in 5 years' time and build it now, I'm absolutely confident that's how it will look.
A final question for you, Peter. I guess you would characterize yourself as a disruptor of how the fund servicing industry has worked over the 20 odd years that you've been at the helm of Apex Group. As I look across the field of fund servicing enterprises, I don't see any of your competitors who are demonstrating an equal level of commitment that you have to digital assets. Now, we've touched upon the extent to which your customers are supporting you as you do that. But do you ever feel lonely, or do you feel that you're placing a bet which nobody else seems to have the willingness to place themselves? I'm wondering, are you riding a wave here of coming client enthusiasm, or are you fulfilling a personal conviction, a personal vision about where this industry is going to end up as a result of digitization?
That's a tricky question to end with, Dominic, but I do feel that it's full conviction from me personally about where this industry will end up. But it's not without validating and checking and speaking and being a CEO that has all the conversations, has demos of all the tech, understands and can talk about the different types of chain and the merits, pros and cons, and understand how chain can be interoperable, and understand what the difference between permissioned and unpermissioned is, and smart contracts, and how they can put the permissioning into those smart contracts. So I've spent a lot of time personally, really digging into the detail, which gives me that conviction. And certainly, yes, I am sort of trying to plan how the world would be, in finance in a few years' time, and create it now, which can be a little bit lonely, and it absolutely. But I'm in an opportunity which you don't normally get as a CEO of a asset servicer, where actually you can create a valuable change in an industry, which will mean that people have better products to retire with. They have better wealth to retire with if this all comes together. They have less cost to send money around the world, which makes a lot of difference to a lot of people's lives. So I'm doing it also with an ethical view in mind that actually if this does work, it makes everyone's lives a lot better, I think, in terms of retiring with more confidence, having more wealth to be able to be saving on your journey, or even if you're, I suppose, in a lower grade roles around the world where actually you're working hard to send money home to a family. Actually, if you send that with fractions of cents rather than wire fees, you work less shifts and work less hard. So there's a real benefit, I think, to evolve the ecosystem. So I'm fortunate in a way that I'm running a big business and I'm paying attention to this. And yes, it is quite lonely. If certainly if I'm wrong, it'll be very lonely. But I don't think I'm wrong, because I'm really checking a lot with really credible people in the industry and bouncing ideas of people I respect, in the industry, and also talking to large institutions, who are also doing the same thing, where you see the narrative coming out of BlackRock or DTCC, large institutions that are actually on the same journey as we are. We're just on the other side of it. So yes, hopefully it won't be lonely for long, but I am fully convinced and convicted that this is going to be where the world will be, and it will be a lot better as an ecosystem and an industry for many people once this shift happens. But not everyone will be wanting this shift to happen, because some people will be finding that their business models become disrupted because of the technology that now is in place. So it will be interesting to see how this evolves over the next few years. But absolutely, we're all in on this change.
Peter Hughes, CEO and founder of Apex Group, thank you very much for sharing your time, your insights, your experience with the members and followers of Future of Finance.
Thank you. Great to see you, Dominic.